As always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon and welcome to the market recap. It is still Wednesday, November the 9th. My name is John Hoagland. As always, thanks for trusting me with your time. Markets, I guess the equities did a little bit more than sag waiting for the CPI numbers tomorrow. Equities closing down about 2%. The mini S&Ps are unofficially down 78 points, 2.1%. NASDAQ down 261 points, down 2.3%. And the Dow futures down 658 points at 1.9%. So a pretty good down day for the equities today. Thanks for joining me for Make Hoag Money today. We tried to pick the bottom. We held in there as long as we could. It was a worthwhile trade, I thought, but unfortunately unsuccessful. We've got tomorrow morning to make that money back for me, and we'll see if we can't do that. Crude prices settled considerably lower today. 85.83 a settlement price, down $3.08 a barrel. That's 3.46%. And the story of the day, I guess, is Bitcoin. Bitcoin futures dropped over 12% today alone. Unbelievable, right? Settling at 15,615. So Bitcoin owners getting a good whack today. Not the only ones, right? I got Lacey here looking to get pet. It always seems like when I start talking, she wants to come over here and play. So what we're waiting for now is tomorrow, the CPI. The CPI numbers, they were last month 8.2%, looking for 8.0%. The core CPI 0.6%. They're expecting 0.5%. So expecting a little bit of a break in those numbers tomorrow. Market doesn't, I don't think, buy that. Market doesn't think that that's true. Of course, we're still digesting the elections as those are still coming out. Lots of uncertainty out there, and the markets don't like uncertainty. I'm going to check out the charts here in just a few minutes. The E-mini S&Ps and I think the NASDAQ and probably the Dow have given us a little bit of a gift for tomorrow morning in the form of the late spike. So we're going to have to see how the CPI comes out, see how the market responds to that, and how the market responds in and around those late spikes. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the recap. And make sure you subscribe to our YouTube channel so you get notified when we do go live. Again, thanks for all of you who attended group coaching today, as well as Make Hoag Money. It was a busy day. I thought the group coaching session today was top-notch. Had some really, really good, interesting questions. And again, we hope that we answered them sufficiently and accurately for you. Of course, nobody knows everything. I certainly don't. I think I learned more doing those group coaching sessions than most of you. So I appreciate everybody coming and asking those questions. Good afternoon. My brother Rick is here. Love you, buddy. George. Lacey was not on the forbidden couch. She's still over here trying to moose me for pets. I think she needs to get outside. Kevin, good afternoon. The rooster. Spencer, ugly day. Should have just stayed on my hands. Account still intact, though, at least. That's a good thing, Spencer. We don't want to blow up the account. We want to be here to trade for tomorrow. I'm thinking crypto crashing brought the market down today. I got whacked too. Sorry about that, Rooster. Bull and bear strategy, eh? Vince, my guy, Such a humble. I appreciate you too. Thank you. That's very nice, Bull and Bear. Strategic. Appreciate that. So let's take a look through the charts and take a look at what we saw earlier, what happened today, and what we might think about tomorrow. Always, my homework for tomorrow begins now. It's the end of the trading day. Got to take a look at what I did, to do my journal, think about what I could have done better, what I could have missed, what I caught, what I didn't catch. And always thinking about improving. You've got to be an archaeologist, I guess. Just taking a look back at what happened in the charts. And those charts are just, two dimensions of it. There's many dimensions to trading. I'm constantly trying to create a holistic view. In other words, not only is it up and down, but it's depth and other parts of the market that paint a good, solid picture. So you get a good hypothesis and a strategy to trade to that hypothesis. It's always challenging, always interesting. And just like golf, one or two good strokes keep you coming back the next day. During the day Bull and Bear strategic, the best times to trade in the equities, in the E-mini S&Ps, to me is always the regular trading hours, because you have all the participants that are available to affect the marketplace. You've got the longest time frame traders doing their executions during regular trading hours. You've got most of the U.S. based traders trading regular U.S. hours, even most of the overnight traders. Might they be U.S. based, but they're shorter time frames, smaller, weaker hands traders. They're not the big money. So I want to see as much information from as many time frames, I want to see the biggest traders and the smallest traders all in the same room, because a lot of what we do is pitting time frame against time frame. If you sense that the longer time frame is in the marketplace, you can get a sense that your direct competitors, if you will, some people don't like that I call them competitors, but your similar time frame traders are all going to end up getting too long or too short, and that is where I find my opportunities, is when I can catch those. We kind of thought maybe that was happening in the S&Ps today, but unfortunately, while the market did hold that low for quite a long time, it did extend the range to the downside and leave a late spike for us tomorrow. So, while there may have been a small loss at the end of the day today, there's information already that we can use for tomorrow. It does minimize slippage, but here, take a look. Let's look at these charts. When we're looking at the S&Ps, this is the S&P daily chart. So we got a overnight test of weekly kickoff high. We've tested basically back down to 1, 2, 3, 4 points of contact on this trend line. This is going to be an interesting opportunity for us again tomorrow. We actually ended up losing open interest yesterday instead of gaining open interest. There was a small loss in open interest, but largely kind of an inert number, nothing tremendous. We've still a lot of uncertainties, election, CPI, we all know about that. We've got our triangle formation that we've now tested back down to the lower trend line of that triangle formation. Take a look at the 30. So we had our craziness yesterday, our overnight test to weekly kickoff high. We were unable to even get to it. The market opens, rotates. I was looking for opportunities for longs. I actually early in the session today, and did catch a couple of decent up moves, and then pretty much called it a day. When we started extending the range to the downside, I was a little busy, and it was when we put this low in here when we were looking for longs in make hogue money, and here's why. Here's the TPO charts. This naked point of control right here was a visual target for traders to get to. Okay? We got to it. Unfortunately, there's another naked volume point of control considerably lower than that. So we did extend the range at the end of the day. We did close in that extension, which creates the late spike that we're going to be looking at tomorrow morning for possible information that we can use moving forward. Speaking of late spikes, in crude oil today we had a late spike. We had 1, 2, 3, 4, 5 points of contact on this trend line. We broke out below this trend line, and how did we figure that might happen? We get almost a test down to weekly kickoff low here, which is actually, yes, weekly kickoff low is 36. No, 85.25. So almost a move down to that level. We had a late spike yesterday. Here was our late spike. Our late spike, the high of it, the base of it, was 89.21 was the base of the late spike right here. There was also a secondary base that was all the way up here, but the market didn't even give us a chance to see those levels for execution because the market opened with a gap after a late spike to the downside. That's one of the things that's going to mark acceptance of lower pricing. Then it leaves the opening range at the high of the session and continues to push lower all day long. We took out 2 naked points of control on the way down. We've got another one before we really reach, well, this is I believe, weekly kickoff low. I don't think it was in the right spot here. So 85.25 is probably this naked point of control, right? So we got this market moving lower, but it's getting relatively cheap with regard to weekly kickoff levels. So this is what we're looking at tomorrow with the S&Ps. If we open below the late spike, odds are the CPI numbers aren't going to be very good. And if we can't close the gap relatively early, or we do leave the opening range at the high of the session, that gives us license to continue to push to the downside. I don't know if it gives us license, but it increases the probability of acceptance of lower pricing. Here's the, you know what else I was going to show you? Bull and bear strategic. If you look at the 30-minute chart, okay, here's yesterday's volume during the regular trading hour session. Volume, volume, volume. Overnight volume. Pre-open volume. Today's volume. You can see that the vast majority of the volume is occurring during regular trading hours. Doesn't mean that there's not opportunity in the overnight. Sometimes we actually use overnight information for early trades. But at least you know all eyes that are capable of affecting price are available. So I trust the information I get during regular trading hours much more than I trust the information during overnight. So we got our pullback again in the NASDAQ. Volume was not all that tremendous in the NASDAQ on that pullback. We got a little bit higher volume on the New York Stock Exchange on the pullback today in the S&P and the Dow. Here's the 30. So again, market opens, tries to push higher, can't get to point of control, continues to push lower. Where did it get to? Let's take a look at this on the NASDAQ chart here. Well, we've got overnight on here, and I'm missing today. Let's try something here. Let's see if we can bring up today's TPO. Okay, there it is. So I'm going to unsplit it. So the market tries to get up. Okay, here is that point of control from the 4th, was all the way down here in the NASDAQ. It did get to the naked point of control, but that was already checked a couple of days ago. We do have a late spike. So again, in the NASDAQ and the S&Ps, we'll be watching to see if this late spike opens below, leaving a gap. If it doesn't, if it opens inside, that's a secondary possible acceptance of lower pricing. And if it opens above, that may be rejection of lower pricing. Does volume minimize slippage or maximize risk? It minimizes slippage if there's a lot of volume, but it doesn't maximize risk necessarily. Risk is something we can choose, bull and bear strategic. We can choose the risk. So, here's the NASDAQ 30-minute. Naked point of control checked here. TPO naked point of control not checked down below. Interesting. Gold. So yesterday we had the big jump to the upside. Apparently adding approximately 11,000 in open interest. I'm going to make sure that that is correct. Yeah, just over 10,000 in open interest on that push to the upside yesterday, which is relatively substantial. What did happen today was we did check weekly kickoff high. We got through it by 8 ticks. Now remember, these weekly kickoff levels are zones. They're not necessarily finite levels where we're expecting exactness. Here's the 30-minute chart. There we go. There's our dive up to check the weekly kickoff high, rejected, continuing to just kind of rotate back and forth inside the value area from yesterday. One little excursion outside of it to test that level, finding rejection, now back into value. Don't see that there's anything necessarily all that interesting to focus on tomorrow, except for weekly kickoff high. If we can get above it and find some acceptance, I believe there's room to grow. Okay, we've got these swing highs here. And then after that, I think we've got plenty of room to the upside. So, of course, you got to be watching the dollar, which the dollar didn't do too bad today. I mean, it closed up about 0.75%. It's back up above 110, so not bad for the dollar. For the euro came off today as the dollar started to firm up a little bit. That just seems to make sense. Take a look at the 30. So opening in range, we had an inside range, an overnight. We really kind of kept an inside range in extended trading hours through the session today. Our high today relatively close to weekly to value high from yesterday. Low from yesterday, or pretty much our low for today. Some decent short time frame levels these markets are providing. And again, with all of this, all these expectations, a lot of our longer time frame traders have been working on keeping hedged or positioning to protect themselves against volatility. Now I see, bull and bear, that's your idea is to watch yourself around fast moves or gaps. It is a challenge to do so, but you do have that opportunity to set those stops. And the thicker the market is, the less likely you're gonna have serious slippage. It does happen from time to time, but most of the time, you're going to be fine, especially in a market as thick as the S&Ps. Here's the 10-year. So the yield kept turning kind of both sides of settlement. It ended up closing on its lows for the session, so that makes sense that after the close here, we see this market trying to continue to move to the upside. Here's the daily. So what did we do yesterday as far as adding 70,000 in open interest? I want to see if that's still rings true. 70,000 in open interest added yesterday on an up day. Makes sense that the market tries to continue to push that way. And look at volume. We think about auctions. One of the important parts is volume. If volume continues to increase and open interest continues to increase, the auction to the upside is presenting as healthy and likely to continue. It's when things start to fall off that we start worrying about the market changing direction or market state. Doesn't mean it's going to turn around on a dime and head lower. It could consolidate there for a while. And for the natural gas, wow, nice test of weekly kickoff low today, 570, within 15 ticks of weekly kickoff low before pulling back. Volume starting to weenie a little bit here, starting to lose a little bit of volume, and we lost 6,800 in volume yesterday. Is that right? Let me double check that on my trusty CME bulletin. Yeah, we lost almost 7,000 yesterday on this pullback. So the island top that we have is not necessarily bringing new selling down below it. That's a little bit of concern for shorts, although I'm sure the shorts have been happy today. Test of weekly kickoff low within a few ticks of it. No gap close. But we are leaving gaps and some kind of weaker structure above. So tomorrow I think is going to be an important day. Of course, the EIA natural gas comes out at 9:30, and I want to go ahead and take a look here at what we have from the EIA petroleum status report. So much bigger boost. We're looking for 1.36%. So 1.36 million barrel boost, 3.9, almost a 4 million barrel boost in crude stocks. So fundamentally, price would have been probably moving lower throughout the day today. So I haven't looked at what happened in this day in history yet. Some really bad things, and I don't like talking about those. So 1990, Willie Nelson's assets are seized by the IRS. Hey, Lacey. Easy, girl, easy. Easy. What about in music? Lacey, easy, easy. There's dogs walking by. Birthdays. Nobody I really recognize. Tom Fogerty. It's his birthday, 1941 he was born. In 1958, Elvis Presley's Hound Dog exceeded 3 million copies sold in the U.S. on this date. 1961, Brian Epstein saw the Beatles playing live for the first time during a lunchtime session at the Cavern in Liverpool. Epstein went on to be the group's manager, of course. 1967, the first issue of Rolling Stone magazine was published in San Francisco on this day. 1969, Simon and Garfunkel record what would be their signature tune, Bridge Over Troubled Water, with the future member of Bread, Larry Knechtel, on the piano. But today that was recorded. I don't know how they know it was recorded today, but 1974, Bachman Turner Overdrive went number 1 on the U.S. singles chart today with You Ain't Seen Nothing Yet. Apparently, that stutter that Randy Bachman used to sing the lyrics was a joke about his brother Gary, who had a speech impediment. The recording company liked that take better than the non-stammering version and released it. Not that nice there, Randy. All right, Lacey. I'll get you outside. All right, Kevin, gotta hop. Talk to you soon. Let's get some good rest tonight. I know tomorrow's going to be another challenging day. Looking forward to the forecast. And make Hogue money tomorrow. Tomorrow's Thursday, so no recap. They'll be doing the podcast. So looking forward to spending the morning with you tomorrow. Get out there and profit tomorrow if I don't see you. If I do, I look forward to having you with me. We'll see what these markets look like in the morning. Should be another interesting and challenging day. I got you, Lacey. I get you. Okay. Have a good night. We'll see you in the morning. Be kind to yourself. Be kind to others. Say a prayer for peace. And pet your puppy.